you know about stop loss is wrong. Yes, I know that can be shocking. But if I ask any trader if the last position that they took they had a stop loss, most of them they probably tell you yes they did. But if I go even further and ask what was the stop loss, you see someone will tell you no, mine it was, let's say, maybe 10 pips, or maybe it was 1% of my capital. But what if I tell you that there are actually three types of stop loss that every trader should use if you really want to be consistently profitable? And of course, stay with me in this video. I will show you exactly the different kind of stop loss that you must use, and also that are used by professional, so that you can be consistent with your profit. So here's are the three type of stop loss that you must use. The first one is actually the price-based stop loss. That's one I think that almost everyone has been trading for some time. They actually know what it is. So today we are going to talk about that, the three types of stop loss. And the first one, as I said, it's what we call the price base stop loss. So we can say stop loss or exit, the price base stop loss or the price base exit. And the second one, it's the time base stop loss or exit. I know that from this one already, so many of you are already wondering what is the time-based stop loss or time-based exit. So that's the reason for this video. So just stay with me and you understand exactly what I mean by that. And the third one, which is the most important one even, is the mood-based stop loss. So we have the price-based stop loss, the time-based stop loss, and the mood-based stop loss or exit. Now, I know that most of you are watching the video, especially those who have been trading, you are familiar with the first one. But then in this video, I'm going to show you more about the second one and the third one. So without even losing time, let's go to the first one, the price-based stop loss, which is probably the one that almost every trader are used to. But not every trader, because I even know some other traders also who don't use stop loss, which is very dangerous, that I don't recommend at all. So let's dig deep into the first one, which is the price base I think the price-based stop loss is just the way the word says it, price-based stop loss. It's the stop loss that is based on the price movement. It's based on your technical analysis. So with the price-based stop loss, this is where we put our stop loss according to, let's say, the technical, or we put our exit according to, it can be our technical analysis. Let's say you trade support and resistance, where you say that no, if the price breaks somewhere here and go here, I'm going to put my SL here, or maybe you put your SL there, up there. So depending on either the price go below the support, if you are selling or buying a support or resistance. So this is exactly the way the price-based stop loss, which I think that almost every trader is very have been using it. And then beside that, it can be based on your technical analysis, your graph, and all that, or it can also even be based on your let's say on some indicator. It can be maybe you use the Fibonacci, like a Fibonacci retracement, where you wait for the price to retrace at a certain level, then you can put your stop or your exit, you can get out of the market. And then we also have, it can be also with indicators. Someone can say, no, they wait maybe for some moving average, like you wait for moving average. So it can be many things that can help you decide to exit the market when you are trading according to the price-based stop loss. So it can be support resistance, it can be Fibonacci, but the main thing to know here is that it's based on the price, on the graph, on what you look at the graph. So for this one, I think it's very clear, the price-based stop loss. If you even don't know what the price-based stop loss is, I think you should skip this video and go find a video where you need to learn the basic. So this is the first type of stop loss. Now, the second type of stop loss that we are going to talk about, which of course I know that is not very familiar for many people, is what we call it the time-based stop loss. Time-based stop loss or time-based exit. So we can always put the stop loss or exit. So what is the time-based stop loss or the time-based exit? The time-based stop loss, just as the word says it, is the exit or the stop loss that is based on time. Let me give an example so that you can really understand how you can be able to use this. I know so many people who trade the market during some specific time. Like I've heard so many people say, no, I only trade like the London Open, or I only trade the New York Open, or the Asian Open. So there are people like that. And most of those people who trade based on those specific time like London Open, it's probably because they've discovered they have an edge. They have, let's say, the edge that usually happen during those time. Like let's say London, or let's say New York Open and all that. Maybe they have an edge that happened during those specific time. And most of the time, people who trade like that, they will not say that they trade the whole London session. They will say maybe I trade the London Open. Why? It's because with the strategy, they've probably discovered something that when the market happen, there's something that's happened. Just most of the time can be maybe in the first 5 minutes of the market, or in the first 20 minutes, or in the first 30 minutes, or the first 1 hour. Now, if your strategy is like that, where you trade, let's say, based on the London Open or the New York Open, and then you normally expect the price to move in a certain direction for in the first, let's say, 30 minutes when the market open, but then you find yourself that one day it's 1 hour, nothing happened, or it doesn't go to your direction. Then 2 hours, it doesn't go to your direction. 3 hours, it doesn't go to your direction. 4 hours, it doesn't go to your direction. Normally, that move happen maybe 30 minutes after the open, but you find yourself in a situation where it's taking too long for it to happen. If you already open a position and was waiting for that thing to happen, it doesn't happen, the best thing for you to do is just to close that position. Just close it and exit. Just close it and exit the market. It's that easy. Or if you didn't open the position yet and you see that that thing is not happening, just don't open the position. Because if your strategy is based on a specific time of trading and in a specific period of time, span of time where you wait for something to happen, but it doesn't happen like that day, just close that position or just don't open any position. It means your strategy for that day, it's not respecting exactly the way you do it usually. So the easiest thing to do is just to exit. Don't force, don't try to be patient for 6 hours for something that usually happen in 30 minutes. So this is exactly the way I know that's something that so many people don't use, but this is very important. Otherwise, what usually happen is that if that thing that usually happen like in the first 30 minutes of the open, it doesn't happen, you wait for 1 hour, 2 hours, 3 hours, 4 hours, what's happened that you become frustrated. It will give you a lot of frustration, and most of the time you end up doing something that is usually against your strategy, against the way you trade, because you are going to force it. You must know that the timing that it takes for something to happen is also part of your edge. Your edge, when you did it, it was working according to a specific time. Once it's not respected, even if the graph looks a little bit similar, just don't do it anymore. That's exactly the way you use the time-based stop loss. Now let's go to the third one, which is also very important. Actually, I can say it's even the most important one. It's the one that I call the mood-based stop loss or exit. Why is this one so important? First, because human being, we are emotional being, and our moods changes almost every time. One thing that I don't believe is when they tell you that when you come into trading, you must be like emotionless, like no emotion at all. It's just not possible because you are a human being, and human being, we are emotional people. So telling someone that you have to trade without emotion, I just don't think that really makes sense. Maybe you have to tell them how to manage the trade when they get emotional. That one makes more sense, because since you cannot remove the emotion from the equation, what you can do is to find a way to manage it, or maybe to find a way to manage your trades when you are in a certain emotion. So now the mood trade stop loss, what I do here, I want to say here with the mood base stop loss or exit, I'm going to give you another example again. So let's say when it was just a normal day. Let's say a normal day where you wake up, you analyze your market and everything is okay, and then you start trading. But as things happen during the day, all of a sudden, maybe there's a bad news or a good news that come and change your mood in the course of the day. So the mood in which you initially open your trades has changed, because maybe there's something that has happened during the day. So what you have to do as a trader is to know if that mood, that change of mood, is something that is strong enough that can affect you mentally and that can also even affect the way you trade. You must just stop trading. Now, let's just give an example. Let's say you all wake up in the morning, you analyze the market, everything is okay. And in the course of the day, you get a bad news, for example, that maybe you lost a friend or a loved one, or maybe something just bad happened that really affect you mentally. So you see that when you first open the trade, you are in a different state of mind, a different mood. And now, all of a sudden, you have that kind of mood. You must just exit and stop trading. Why is it so important? Because most of the time as trader, when there's something that's happened in our life, either it's negative or positive, we tend to come and pour a hit in the market. If it's something sad, we tend to come in the market and try to pour everything that's happening in our outside world and put it in the market. That's why you can see someone, let's say, maybe you have a bad news and you end up taking also bad decision in the market, because I'm a very firm believer of the fact that the way you do one thing is the way you do everything. So if that can be a problem for you, where you get a news that can really affect you mentally, best thing, just come, open your MetaTrader and just close it. If you didn't open a trade yet, just call that day like it's a no trade day. That's very important. But it's not only for bad news. It can be also for good news. Even for good news, let's say you started your day normally, like no high emotions, and then all of a sudden during the day, it's happened maybe that you get a very good news. Maybe you just close a deal or something happened, and it makes you so excited. Or you win with something, you win a business deal or something like that. It makes you so excited. So the best advice also that we give you is for you to just stop also trading. Don't trade. If you had some position open, just close them. Why? Because we also tend to think that if you are winning in a certain area of your life, you think that it means that you are also going to win with trading, with your trade. So what can happen is that something very good happened in your life outside, you can feel like, okay, you are invincible. So if you have won in the outside world with maybe a business or relationship or something like that, you think that same way you won with that other thing, you can also win in the market. So you can become arrogant and take even more risk, or trade in a way that is not really according to the way you are used to trade, just because your emotional state is completely different. And we all know that when you become arrogant with the market, it doesn't take long before the market can really come and then humble you. So if you are in a very, let's say, you are maybe sad, please just either close all your trades or no trades at all. Same way, when you are so excited, you're too excited and something very good is happening in your life, either you close your trades if you had trade open, or just no trade. That's what we call the mood-based stop loss. It is very, very important, the mood-based stop loss. And I actually think that so many traders, and this mood-based stop loss can also even happen when just for the emotion that can change, not even from the outside, just from the inside the market. Let's say, for example, you have, let's say you start a day and then you have like 3 losses in a row. You have like 3 losses in a row, or maybe you have, let's say, 5 losses in a row. So all of a sudden, what is going to do in your mind is really going to affect your mood when you have like 3 or 5 losses in a row. So it's very important for you. I don't know if there is something like that can measure your mood. I think that will be very good for a trader, because sometimes we really don't know what is happening inside of us until the damage is already done. So let's say if we had maybe something, I don't know, we call it a mood meter or something like that, so that you can be checking your mood every time you feel like, okay, I've been losing and then my mood has changed, my mentally I've already changed, so I should just stop. That's very important. So if you must know at which level, after how many trades or after how many losses, your mood really change. You change mentally. If it's after 1 trade, just stop. It means that in a day you must take just 1 trade. If it's after 3 losses or 5 losses, so you must know exactly, because you can get, sometimes you can be like you are losing, let's say, three position, and then after that it really mess up your mind and you end up taking very bad risks because your mood, the state in which you first started trading, has changed. Same for the win also. Let's say you have like 4 wins, a 3 wins the day, or maybe 5 wins the day. So you might feel like, okay, I'm invincible. So even your mood also change because you become so excited with what is happening. You might think that you're invincible, and that can also lead to you getting in a state that is not good for you to trade in the market. So this is very important, to be able to check your moods and know that you must use a mood-based stop loss or a mood-based exit whenever the mood in which you first entered the trades changes. That's very important. Now, I'm not saying that every time we have a change of mood, we must either stop trading or maybe close the position that we have open, because if that's the case, then it means that we probably not trade in the day, because we have mood swing. You can have mood swing during the day with everything that is happening. But I'm talking about the mood that you feel, the change of mood that feel like it really affects you mentally, because it's not every mood that is going to affect you mentally to the point where you have to either close your position or not trade at all. So this is one of the very important SL stop loss or exit to use, is the mood-based stop loss or the mood-based exit. So with that, I think you know now that there is not only one type of stop loss, there is actually 3 types of them. And for you to be a good trader, a consistent trader, you have to know how to combine the 3 of them. You shouldn't use only one of them, because the price-based strategy, the price-based stop loss is also very important. I can say it's even the fundamental one, because you cannot use the mode base or the time base if you don't have a good strategy, if you cannot read the chart. It's only when you know how to read the chart, when you have a strategy, when you understand the chart, you can read your technical analysis and other stuff, that all those other 2 cannot be applied. So it's very important for you to be able to combine the 3 of them. So if you really want to be profitable in the long run, you must be able first to understand the price, so you can you can be able to use the price-based stop loss, and then to also know your edge and the time in which your strategy is more profitable, especially if you do day trading, so that you can be able to apply the time-based stop loss. And then third, you must be able to check your mood to know exactly when the mood in which you open your position has changed, so that you can be able to use what we call the mood-based strategy. So this is exactly the 3 types of stop loss that you have to use if you really want to be consistently profitable. I know this is not easy, especially if you've never done it, but just try it, and trust me, you will understand why it's very important to use all the 3 of them. So thanks a lot for watching this video. And if you really like this video, I will ask you to subscribe to my YouTube channel, because I'll be bringing so many videos like this where I'm really telling you most of the things that traders don't even know, but are very important because they are used by professionals, and that's what makes them consistently profitable. So if you feel like you've been stuck with trading for a long time and you want to take your trading to the next level, just go there, check the link in the bio. You'll be able to see all the information about what we do, and you can even be able to book a one-on-one call with me where I'm going to go through your trading journey and also help you to get to the next level. Thanks a lot for watching this video, and see you on the next one.